Record high at the Nasdaq. Why? Why today?
Well, we were talking about this before we went on, about near-term news flow. I mean, here's the bottom line. The Fed has just told us that they're going to be taking this very slow, and don't pay attention to the start date, which is what everyone's obsessing on. That's good for stocks. Earnings expectations continue to be to do well, especially in areas like healthcare and technology and more innovative consumer discretionary areas, which are really heavy in the Nasdaq. So it's not surprising that you're seeing it in that group of stocks.
So would you qualify it as a Fed rally or a fundamental rally?
Well, this is a fundamental rally, but if the and what's the big driver is that ultimately earnings are going to come through fine over the next year or two, and that's important. What the Fed told you yesterday is they're not going to take the punch bowl away, or if they do, they'll do it so slowly that we can chase them down the hall and continue to get some punch.
What kind of stocks and sectors can move without Greece, without the Fed, that are moving on true top-line growth in this environment?
And that's exactly where we're focused is what I call secular winners. These are companies that don't need a good economy. And so I think that we're going to see, as much as I'm really bullish on the market, I'm not so bullish on the underlying economy. I think we're probably in a 2, maybe 2.5% GDP environment. This year, the Fed just said is going to come in at less than 2% GDP. Right. So what are we looking at? We're looking at healthcare is far and away, I think, the real big winner. Big chunks of technology, but really newer technology companies. And then you also have not all of consumer discretionary, but more innovative consumer discretionary names. And we are the leader. On a global basis, we're clearly the leader on those kind of companies.
And two of those literally described Fitbit in its trading debut today. Interesting if you look at the intraday chart, though. Yes, we had that huge spike up, opening around $32, but we are well below that now. We're about 92.76. 92 would be amazing. 29.76. I mean, what do you make of an IPO that can't sustain that bump at the top? Is this kind of a not good sign?
Yeah, and I'm not an individual stock guy, but what we are seeing is a theme throughout the discretionary space and in other areas where, healthy living is so important. And, for example, you see the same theme in supermarkets. Why in this environment would supermarkets be doing well compared to many other retailers? Because people are so focused on their health and healthy eating and healthy living that they're willing to pay up, and that's good for margins, it's good for revenues in those companies. And as you said, in a slower environment, it's harder to find margins. I'm sorry, hard to find revenues. And
hard to find growth at the same time. So At what point, though, do you get concerned? In terms of, are we at a bubble in these areas? I mean, yes, the private market, we're looking at Airbnb valued at maybe $24 billion. But at what point does that kind of bleed into the public market?
Yeah, I don't think we have a valuation issue. I mean, the market right now is at about a 17 multiple. And just to put that in perspective, the range has been anywhere from a low of 6 to a high of 24. It's a really wide historical range. I don't think that you have a problem on valuations until you see PEs getting closer to 20 or maybe even through 20. And we're not even remotely near that. If you look at the spread between equity valuations and bond valuations, there's a huge reason to think that stock PEs are going to continue to go higher.
1,354 days without a correction. You put that note out on Monday.
Right.
Are we never going to see it?
Well, we were talking about this before. Is this the rally that my grandkids are going to be saying it's going to keep going without a pullback? I think that this is going to go a lot longer. I mean, putting it in perspective, in the 90s, between 90 and 97, 2,500 days without a 10% pullback. We're far away from that.